Hi, I'm Jessica Amir from the trading platform Moomoo. With me today is Vihari Ross. Vihari is an esteemed investment manager and she's with Antipodes. Vihari, just tell us about Antipodes and give us your outlook for equities for 2024.
So Antipodes is a Sydney-based global equities manager. We manage $10 billion on behalf of our investors around the world. In terms of the outlook for 2024, we think rates are going to start coming down in 2024, but we're mindful of the fact that housing might keep core inflation levels high. But that lower rate environment should be positive for markets in terms of broadening out that performance compared to 2023, where we saw US tech names really concentrate all of the returns. We're expecting AI to continue to be a tailwind in 2024, but again, we're conscious of paying that right price. So some names like Microsoft, TSMC are still in the portfolio, but we're cautious about some of those other names that ran really hard last year. We're also quite positively disposed to sectors that are favourably positioned for the tangible investment cycle. That's things like decarbonization, reshoring manufacturing, security of supply of energy, particularly in an election year, we expect that to really be a tailwind as well. When it comes to China, that's an economy that's been under pressure because of the property sector, but we're really seeing some high quality defensive names trading at really depressed multiples. And we're also seeing a lot of opportunity in markets around the world, be emerging markets like Brazil, Mexico, Indonesia. We also think those markets are poised to perform well in 2024 as well.
Vihari, what's your Aussie stock pick for 2024?
So Jess, I'm going to be a bit cheeky here and choose Antipodes' own active ETF, the Antipodes Global Shares Quoted Managed Fund. It trades on the ASX under the ticker AGX1. So technically, it's still an Aussie pick. What you get with AGX1 is a portfolio of 60 global companies within a single trade. Some of the themes that we're thinking about right now in AGX1 is the transition to cloud and AI investment. We have investments in Microsoft, we have investments in TSMC. We're also looking at the energy transition that gives us exposure to companies like the French oil and gas player Total, as well as the German renewables company Siemens Energy. We also have exposure to investments in Brazil, Mexico and China in terms of some of those emerging market cyclical opportunities. And we're also conscious of that uncertainty in the outlook economically at the moment. So we've anchored the portfolio with some investments in healthcare and staples as well. So with AGX1, you can get that single trade on the Australian Stock Exchange, get access to this amazing suite of global companies.
Vihari, what's your international stock pick for 2024?
So I'm going to pick Oracle. That's a stock that's been overlooked because it's been perceived as this old world tech business. But it's actually a pragmatic value way to play a very significant tailwind in cloud monetization and AI monetization. It's something that the market really sat up and took notice of in 2023. But there's sort of two things you need when it comes to monetizing AI. The first is the ability to deploy vast amounts of computing power cheaply. And the second element is obviously having a vast amount of data on which to train those AI models. Oracle has both the power and the data to really capitalize on monetizing AI across their existing customer suite. When it comes to Oracle, there's really a few key pillars to the thesis. The first is that they're emerging as the fourth global cloud platform through their Oracle Cloud Services business. That's a business that's growing at 50% per annum. The next is their SaaS business has significant momentum and they're capitalizing again on their existing customer relationships, particularly in the healthcare space, to keep that business going. The next element is that transition to the cloud. They're still only 15 to 20% of the way through that cloud transition. And when they make that transition, they actually double the value of their customer over the lifetime of that contract. Not only is that a big saving for the customer, but it's also a huge tailwind for Oracle. The stock's trading on 18 times forward PE. It's growing at 10 to 15% per annum for the next decade. So not only is it cheaper than the S&P, it's also growing faster than the S&P 500. I think that's a really compelling investment case in the global space right now.